Our first look at third quarter GDP is better than expected. We're looking for 3.2 to 3.3, up 3.5%, 3.5. Of course, that follows our last quarter, which was up 4.2. Let's go through the internals. Consumption jumps to 4%. The pricing index lays low at 1.7%. And the personal consumption expenditure quarter over quarter core 1.6. That eased up a bit too. So the pricing side eased up, consumption ramped up, and we ended up with a little bit more horsepower on the top line. Now the pre-opening equities are really moving to the upside, even though it's still negative. It's a lot less negative in Dow and S&P futures. Dollar index has been on a tear. That's holding on to its gains. And today's a big day for Treasury yields. 311, the previous high yield close of the year before we ramped up higher into the 320s. Well, we haven't really settled below that. We're trading below it right now at 308, 309. It's going to be super important for you technical analysts and armchair technicians out there to pay very close attention to which side of that previous high we settle at. Becky, back to you.
Hang on a second, Rick. I had somebody yapping in my ear. What did you say it's very important we pay attention to? What technical levels?
310, 311. It was the previous high from May, the high yield close before we zoomed up about 4 weeks ago. And the fact that we've been able to virtually hold that on a closing basis with all the volatility in equities, considering the relationship that yields usually give up ground when stocks give up, and stocks have been really surrendering some ground. So we want to pay attention. You know, we were flirting with all of the gains for the S&P and the Dow diminished just so many hours ago. And the fact of the matter is we settled at 241.10. So obviously the Treasury move has been holding. And I think that has been a stalwart aspect of Treasury yields for 2018. Very few give-backs to the downside.
I want to apologize, Austin, that she said that you were yapping.
No, it was Joe who was yapping. I have an IFB in this year. It was you in this year that was yapping. Rick, thank you very much. Have a wonderful weekend.
Austin,
and thank you for bringing that to us so quickly and so up to date. Joining us with more reaction on this is Steve Liesman. And anybody, Rick was just talking about what was happening in Treasury. If you've been watching what was happening with the futures, you did see some pull up in the futures. We're still down by about 250 points, but that's better than where we were right before we saw these numbers. Down 256 right now for the Dow, the Nasdaq down by 233, the S&P down by 42. So perhaps we're in a situation where good news is good news, and not good news is bad news because it means the Fed's going to hike. Also joining us right now is Maryland School of Public Policy professor Phil Swaggle, and our guest host this half hour, Austin Goolsbee, the professor at the University of Chicago's Booth School of Business and the former chairman of the Council of Economic Advisors. Yapper-in-Chief Joe Kernan's here too.
I thought Austin was talking.
Becky gets away with that. Becky can do that.
Our bickering for long enough. If she wants to stay on the yapping, I'm okay with that.
Yeah.
Steve, what do you think?
Well, I want to do a one hand, the other hand kind of deal on this one, because you have to like the top line number.
Absolutely.
3.5%. That's the strongest two-quarter average growth we've had since 2012. The strongest three-quarter average growth since 2014. So this is a good number coming after the 4.2. Some of the internals I don't love about this. We got there mostly through the consumer. That's good because that may show the tax cuts, jobs, wages, helping out consumer spending. What's not good are some of the other aspects to it, which is that we had a fall off or a decline in the growth rate of business investment, just 0.8. Structures down big, but even equipment up just 0.4%. I don't know if the better investment or CapEx is in the future or if it's sort of leveling off, if there was an initial rush. And then you had housing investment down 4%. And then there's a lot of kerfuffling going on over trade. Exports down -4, imports up 9.1, which maybe tells you there was a surge in imports that came in trying to get ahead of the tariff. So there's a little bit of a noise, I guess, in the data. I love the consumer part of it. I just don't understand the CapEx part of it, and I'm worried about and he also had a big surge in government spending.
2014, what quarters were those?
I'll tell you exactly. For the two-quarter average?
And what? No, the three-quarter average that was
three-quarter.
That was this high. And what was the fourth quarter
or the fourth one that you're adding into that got it well below 3%?
All right, so that three-quarter average, we did
I don't believe that
a
that's
5.1, a 4.9, and then a 1.9 in the fourth quarter.
Okay,
and that averaged to 3.97.
Yeah, and then what killed that, the move to a 3% full year? Because we never did that. So it must have been an awful, one of those terrible first quarters that you've talked about so many times, maybe, right?
Yeah, the first quarter of that year was -1.
That's what, it had to be to scale
Had to
it.
be
Yes.
Good thinking, Joe.
Well, I didn't
thinking.
understand it because I was shocked.
Joe's always the math guy.